Hey, everybody. Good morning. How's it going? Welcome to a new episode of Stocks for Breakfast. Thanks so much for joining me today. We got a lot to talk about, actually. In today's video, I was absolutely shocked at the way the market closed yesterday and then how many great ideas unfolded this morning, both from a sector rotation perspective, from an earnings perspective, but even more importantly, we even break it down a little bit more detail where we also just look for stocks that meet certain criteria. And inside the bootcamp, we have a ton of ideas that are proprietary to us, such as the snapback trade, the bullish U-turn, and a few other ideas like that, including the saturation play. I was doing my search last night. It took probably around 90 minutes, maybe an hour and 45 minutes to do the game planning. I was really surprised how the market pretty much got hit again yesterday and the amount of good ideas that unfolded today. So stick around. We got a lot to talk about. I'll be back in just 1 second. Okay, as with everything we say every morning, first, I'm very grateful that you've chosen to join me today and that we're going to look at a lot of stocks to buy today. But first of all of what we talk about is for educational purposes. It's up to you to make that final decision. It's my mission to help you make better decisions. If you find that what we do is valuable to you and you make some money off it, or you just learned something new, do me a favor, smash that like button and hit subscribe, because it'll let me know that this is the kind of stuff that you like. So first, I want to say hello to a couple of people. I just want to say good morning. Catherine Goodson, good morning. Good morning. Love having you in the boot camp. Carlos, same. Thank you so much for being here. Let's see. We got a new name. Roxana Patel. Good morning, Roxana. How are you today? Thanks for joining us. Let's see. Jason Miller, my buddy Jason Miller. Let's see. Hyderi MD. Good morning. Dubai. I love the fact that we could speak to somebody on the opposite side of the world. It's awesome. Let's see. John A. Lots of stocks marking up. Yep. Absolutely. Let's see. Raphael, how's it going, man? How are you? John Bates, always a pleasure. Chuck, good morning. How's it going, pal? David LeBate, my early morning partner inside of Discord. Actually, I want to answer a question here from Myers. If I have order flow on monthly, weekly, and daily timeframes, is it safe to enter on a strong 1 minute green candle, or should I wait to see the 15-minute opening? And here's my answer to that. We do that in the boot camp. I can't give that answer here. What and when and how to enter is what we do in the private community. What we're talking about here is learning how to develop ideas and that kind of stuff. So Myers, click the link below and learn more about joining the boot camp. It's 30 days. It's not a subscription. I think you're going to like it. All right. Let's see. So obviously some early news that hit the wire today and yesterday. We're going to first focus. Actually, we're going to talk about JPMorgan. We're going to get right into JPMorgan in a second. But we want to talk about this because it was the reason that the market rallied last week. Now it's back on the table again. They're agreeing. They're not agreeing. It's kind of back and forth every day. The bottom line is it's something you need to pay attention to, but not really something you need to trade off of, because it really comes down to it's kind of priced in already. At this point, it's really bad news that would affect that particular story. So again, with everything that we talk about, I'm actually going to show you a part of what we discuss every day in sector rotation. Hold on, maybe I need more coffee. Hang on 1 second. So we want to hop into this because this is obviously the big thing that we're kind of getting to be known for: order flow, sector rotation, reading the tape, fine tuning our entries and exits into that. Wow, actually, you know what? I want to say hello to some people. This is amazing. Nate from Iraq, Mohammed from Australia, and good evening in Australia. Actually, we had a coaching call with somebody last night, Mohammed, from somebody who is from Queensland, but was visiting his mom in Tasmania, and he was dressed up like it was winter there. I don't know what's going on over there. Maybe it is. Minvai, good morning. And David LeBate, thank you so much. Really appreciate that. Rajesh, every time I see you on the call, I think of the Big Bang Theory and Rajesh Kuthrapali. I love that show. And Frank Allison, good morning. Okay, so what we want to talk about here, we want to focus on sector rotation, but first we want to get into the JPMorgan earnings as we discussed coming into the day. So we're actually going to work our way over into how the stock is trading right now. It's up roughly 40 cents right now. It's up as much as 75 before. here's the biggest thing that we want to talk about. Chuck, thank you so much. I really appreciate that. Chuck says the boot camp is phenomenal. Chuck, I honestly, I gave you, I challenge you, Chuck. I want you to keep making sure you ask more questions. I know you're new to the community, but in that 30-day window that we're together, I want to make sure that you make as much money as possible, learn as much as possible, and then you become the reason you're making money. So thank you for being a part of what we do, Chuck. Here's the thing about JPMorgan, and we talked about this a little bit yesterday. Every single company, I think that a lot of people, actually, you know what, I'm going to pull this down into the screen, and just if you want, you can take a quick snapshot of that. These are the numbers for JPMorgan this morning. Every company is in a different industry group, and those industry groups are within sectors. Now, here's the thing. We spent some time last week or so, especially kind of getting ready for earnings season to come in. You need to know there's the hardworking way and there's the lazy way. The hardworking way usually works. And the lazy way is why you're not going just one step deep enough into going in and digging out that money and going on a treasure hunt. The lazy way is just looking at the top line numbers, EPS and price earnings ratio, and just the top line, and that's it. You need to go a little bit deeper. And I'm going to show you what I mean by that, because right now the estimates, even coming into today, were for maybe a 10% higher price target for JPMorgan right now. So that's kind of the context. If you remember what we talked about yesterday, we were talking about the future expectation, the guidance, and whether or not it's worth risking money for what you could possibly make. And whether that's a day trade or swing trade, or if it's a investment, you need to really separate those two, or three of those. Investments are a little bit longer time frame. So with JPMorgan, the big number is net operating profit margins. The sales numbers came in a little bit less. I think it was 5%. Let's actually go through those because I want to take a look. All right. So we like to start out with yesterday because that's kind of fun to look at what's expected and then what actually unfolds, so that we could kind of peel the layers back and then talk about what was expected, what happened, and whether or not that moves the needle. Because remember, if you're looking at earnings and you can't wait for that hit, or you're looking, maybe you have an existing trade and you're looking for a big pop, you need to know what revisions to what happened already will move the needle in a way that's significant. And again, raise your hand if you've seen some stocks that had better than expected earnings per share, better than expected revenue, but went down. So there's more to it than just looking at the earnings per share. And again, these are the kind of things that we're going to share every day on Stocks for Breakfast. So you might have had revenue go higher, but the stock collapse, and that's because there's a deeper number that matters. Maybe it's margins that matter. Maybe it's subscriber growth that matters. And we're going to take a look here at JPMorgan. Let me actually just bring this up a little bit so it's easier to read. And down here, okay, the consensus is still bullish. And again, remember what we just said before and everything that we do every day. Right out of the top of the gate here, they're talking about which sector they're in. The reason they're talking about which sector they're in and which industry group is they're in, because each type of industry group has a different catalyst that matters when they report earnings. That's something that you need to know. So if you're just looking at that top line, EPS was this, and that's not deep enough. You need to know if you're going to be harping on a particular group of stocks, you need to know how financial stocks are impacted differently than, say, retail stocks. So Kohl's and Target, which, by the way, we're going to talk about them today too. They're starting to wake up a little bit, as well as solar stocks. So getting back into JPMorgan and the earnings, which again, we'll see here, it's not really moving the needle at all. It's kind of just floating around. Numbers are still being digested. Obviously, we have to see the transcript come out. So that's the first thing I wanted to point out, is knowing the sector and what the consensus is. Now, again, only 10% is the price target for the next 12 months. So let me ask you a question. Is 10% enough for you to allocate your money and tie it up there for the next 12 months? If the answer is 10% was okay, and maybe you were considering it, what had to happen in the numbers to move the needle enough that it would exceed that expected 10% prior to the earnings coming out? So that's where we're starting to get into it. And on the trading side of things, we talk about this a lot. The more distinctions you could make, the more opportunities will open up to you, and profitable opportunities. So if you kind of just go in one layer and be like, oh, what's the EPS? That's not enough. We have to go in a little bit deeper. And by the way, these are what all of the coaching calls are about. All of these coaching calls that we have multiple coaching calls per week. These are really where we dive deeper into answering these questions so that when it comes out, which I'm going to show you right now, is how we start to build that scenario. So if you can see in here, this is actually some of the stuff that we shared recently, quite honestly, both here and in the private community. And preparation is everything. And this is what I'm talking about, making distinctions, okay? So yesterday morning, we mentioned WIN. We also mentioned the solar stocks. And thank you to Lynn Ramirez and Jane in the community for pointing those out. So yesterday morning, we mentioned them. That's a part of game planning. So if we're talking about sector rotation, we're talking about reading the tape, we're talking about did real money get committed, and a lot of real money, which is where you start to see that volume coincide with the price action. We start mentioning it means there's something significant. And remember, we also talked about yesterday, you have your trading plan, which is your strategy and your money management. Then within your trading plan, you go and scan for ideas that match the strategy. Then you have that two separations. You have stocks that meet the scans that go into today's trading game plan. And then you have your tracking journal, which is a little bit further out. Maybe you set an alert or something like that. But yesterday and for the last week, we've been talking about WIN. We've been talking about net. We've been talking about the solar stocks. We've been talking about the rotation where energy stocks were kind of pausing and money was rotating into basic materials and communication services. Are you doing that work? So I want to show you what it looks like from one day to the next. And I want to challenge you to be a little bit better than you are today. I want to challenge you that tomorrow you should be better than you are right now at this moment. But you got to ask yourself, what actions are you taking? Are you tracking this from one day to the next? Do you have a trading journal? Do you have a tracking journal? Do you have a trading game plan? And then are you scripting out what you expect to have happen during the week and during the day? And yes, it is that much easier when you write down and you have, and here's the golden book. It's a black book, but it's a golden book. You need to write down, here's what I expect to have happen in the market this week. Here's what I expect to have happen in energy stocks this week. Then you go deeper and you say, here's the energy stocks I'm looking at this week. Here's what I expect for them to trade Monday, Tuesday, Wednesday. When 9:30 opens, here's what I'm expecting on the open. We actually have a process in the boot camp where we look for the first push in the first half hour of the day to be the high or the low of the day when certain things set up in order flow and certain things set up on the tape. That's how detailed we are, where we are literally scripting out what we expect to have happen in the open. And think about this. We're talking about JPMorgan right now, and we're talking about this email that we sent out. So yesterday we mentioned solar stocks and we mentioned WIN. Why did we mention WIN yesterday? Well, let's take a look why we mentioned WIN. All right, WIN is starting to pop. WIN starting to pop on some good volume, which means that money is flowing into WIN right now. So what does that mean? Well, who's in the same area as WIN? You start to look at stuff like this. This is not coincidence. This is repetition. This is preparation. This is where you expect to make money because you have a process from the market to the sector, to the industry group, to the stock, to you scripting out what you expect to have happen every day. Trading success comes down to preparation. It has nothing to do with luck. Once you're prepared, then the next step is you need to understand managing your risk. And then the next step is understanding how to use what we call the profit maximizer, which is you keep those losses reasonable, which everybody has losses, is a part of trading. Then you learn the conditions of how and when to hold longer. So this trade yesterday in MGM should not have shocked anybody. You should have had that list as soon as we start talking about what sector is that in, what industry group is that in, what are the leading stocks are there. That's the point of why we have these calls. And again, we do this every morning. You hear me say it every day after I leave this call. We have to go into our game plan meeting for the boot camp. We go over this stock by stock by stock and expectations for profit when we start our 8:30 game plan meeting every day. So WIN, that was one of them. Yesterday, we were also talking about JKS. JKS started to break the downtrend. Order flow started to come into JKS. Immediately in your head, you should be saying, what else besides JKS should I be looking for? Well, you start to work your way over and you get lucky. You get lucky because you're prepared. You have this broken down. You're like, okay, run yesterday, JKS the day before, broke. Then let me put run into my game plan. Whether you're day trading or swing trading, you start to get these kind of moves on a short-term basis. It is not luck. It is the three pillars that we talk about every day. Stacking the order flow, reading the tape, and risk reversal. Those are the three pillars of what we do. And this happens because you're ready. So let's continue to get into that email. All right. MGM and Run had massive days. So I'm going to question you. Did you get some? Did you do that extra little bit of work? Now we're going to talk about this. All right. Every single day we start out with this and we drill it down into what sectors are in play. We've been talking about basic materials for how long now? 10 days we've been talking about basic materials. So I'm going to question you. Did you start making your list of stocks that have basic materials listed as their sector? Then you break it down further. Which are the leading stocks over the last couple of months, even a couple of weeks in basic materials? Are they moving now? Are there market leaders I could trade now? Are there stocks that could go into my trading game plan, which I'll trade today, versus stocks that might go into my tracking journal where they're not ready to pop yet, but if and when they do, you have an alert set for that price. I'm telling you right now, if you're on this call, 7:30 in the morning, hey, Kevin O'Toole, good morning, pal. If you're on this call, you're already showing a burning desire to want this to be how you achieve your financial freedom. But if you are here and you're not achieving, you're not seeing the reliability, you're not seeing these holy cow trades that pop out of nowhere, it just means you're not prepared. So there's a gap between where you are now and where you want to be. How are you going to fill that gap? Are you going to join the boot camp? Are you going to keep watching YouTube videos? You're going to keep buying books? All of those are valid ways of doing it. You just have to ask yourself, how fast do you want to get there? That's the question. Me, I like to invest in myself. Everybody advances at their own pace, but I'm giving you the steps. The steps right now are, now we're going to take a look at some basic material stocks. So we've been talking about basic material stocks. Which ones will we start to take a look at now as the market's unfolding? And we're going to go back out to the higher time frames. And we've already been talking about which ones. Okay, LAC is one that we've been talking about for a while. Should you have had that in your watch list? 100% you should have that in your watch list. We've been talking about it for weeks. Again, day trading or swing trading. This is on a day that the market got hammered. Let's repeat that. This stock traded the way it did on a day the market got hammered. Is that luck? No. Everything we do, again, I'll just say it. The New York method is what we teach in the boot camp. Starts out with the three pillars: learning to stack the order flow, tape reading, and then risk reversal. Risk reversal comes down to position sizing, the right profit targets, and all of those things. I'm not telling you this to say you missed this. I'm telling you that I want you to be inspired to challenge yourself to do what we're talking about and be prepared. All of this comes down to putting yourself in position to win. That's what this comes down to. So whether or not you caught LAC yesterday, is it awesome that you could have caught it? Sure. Could you have caught it? Absolutely. We've been talking about basic materials for 10 days. So let's keep working over into more basic material stocks. And we're going to make a distinction between tracking journal and trading journal. All right. All right. So we're going to come over here. So LAC is one at the top of the list. All right. Now, this is one that would probably be going into the tracking journal, not the trading journal, because there's still pretty good bearish order flow. However, you can see here now, the last 2 weeks in this stock, it started to work its way higher. Look at all these green candles. Look at reading the tape. The rallies to the downside grew feebler and feebler. This one actually caught the shorts, broke down, and actually, you know what? I want to talk about that. This broke down, short sale, right? Comes back the next day into what we call a bullish U-turn. Immediately, the shorts are caught. Stop. Oh, no. Now I got to get out of my short. Shorts start to buy. New buyers come in. You get a bullish gap, and now you start to punch to the upside. All of this is not coincidence. This is putting together the pieces. So remember, stacking the order flow is building that argument. Tape reading is putting together the pieces about whether you expect follow-through. How much follow-through do you expect? So when you start to break down, think about your mind right now. We've been talking about basic material stocks. PPG broke down. Oh, not yet, right? No, the very next day, remember what we talk about. What do I want to see? What don't I want to see? If you short that stock and push down a pause, breaks down, and the very next day it reverses. The short sellers are caught on the wrong side of the tape. People looking to buy the sector like myself because the sector's rising up the ladder are now sitting up and saying, oh, wow, that was interesting. I just want a little bit more feedback from order flow. And 3 days later, we get a bullish gap in the other direction. So what's going on now? The sector that's strong is starting to rally. More individual stocks are starting to turn up. Some stocks are buys now. They go into the trading game plan. Some stocks go into the tracking journal. So what's going on in PPG right now? Short sellers are caught. They're hoping it reverses to the downside, which you all know hoping is not a good thing to do in trading. Bullish gap, push up, pause, looking for the next move higher as the sector heats up. Tracking journal for this one, all right? Another one that's been strong is CF. CF has actually been holding. You can see a couple of days of selling. We're looking to be a buyer of CF today. Working our way over into a other sector, consumer cyclical is one that we've been watching for a while. And now we're going to dive into some consumer cyclical stocks. And the one that everybody's been talking about lately, again, tracking journal versus trades to make right now. Trade to make right now, obviously, we've been talking about MGM, right? But a big one that everybody's been talking about lately is BABA. Okay, is it a trade right now? Probably a day trade right now, but not necessarily a swing trade yet. First time it broke through, pulled back a couple of days, finding a bid again. BABA's now in the list as the market turns around. We talked about this one yesterday, BROS. IPO recently traded into a pause yesterday. You start to get a feel for where the money is rotating. Win. Not a swing trade yet, but day trade starting to wake up. And again, going LVS, another one. All right. Also want to keep going back into the email. All right. So we've been reporting about basic materials. Again, being prepared. Net rallied again. Were you there? If you are a regular viewer of our channel, we've literally been talking about net for about 6 or 7 days right now. And every single day we keep talking about order flow is still there. Wouldn't look for a swing trade, but order flow is still there. You can still take advantage of this on a day-by-day basis. Well, did you take advantage of net? Did you capitalize on the day that net had again? Have you capitalized on net over the week? Well, first of all, make sure you hit that subscribe. Best case scenario, you'll get these videos here and talk about it. But again, you want to learn the timing and profit potential, all that stuff. Obviously, you got to get to the other side in the boot camp, all right? These are all the things that come down to preparation. So I'm going to challenge you. This is kind of my thing. I want to challenge you to be better tomorrow. Net rallied again. Were you there? Why not? Why weren't you there? What part of your preparation is the gap? Remember, if you want to make more money by buying stocks, you have to ask yourself, if you're not where you are, what is missing in the gap? You are here right now. Net exploded yesterday. MGM exploded yesterday. LAC exploded yesterday. What part of your trading are you missing from everything that we've been talking about and we talk about every day? What part is missing? I'm going to challenge you. Get a notepad, put it in your journal and say, what am I missing? What definitely works, what's not working. All right. All right. So we're going to get into some more ideas. We just talked about MGM. We talked about, we're going to talk about GM as well. GM over there now rallied and paused. You remember how we keep talking about a push and a pause, a push and a pause, a push and a pause, a push. And now GM is pausing. Now GM is pausing. So what is the next likely move for GM? Well, to make a run at the next level up towards 64. So that's what I'm going to be watching in GM. So I want to keep going back to JPMorgan because that was the main conversation today. And right now it's up $1. So the numbers are still being digested. So as we talked about here, earnings per share, 374 over 3. So that's a big number. That's a big top line number. Revenue, 30 billion versus 29.8 billion. So let's talk about that for a second. So we just talked about before that consensus from the analysts were a 10% rally over the next 12 months as a target for JPM. So a slight beat in revenue, is that enough to move the needle in a big way where you see a lot of these stocks exploding? Not yet. We still need the transcript to be digested. We still need to have the conference call and see if anything interesting comes out. So investors right now, the stock's up maybe 80 cents. JPMorgan came out with, I think, what we might call tepid numbers. And that's not really a horrible thing as far as company-wise. Like, it's not necessarily a bad thing because a lot of these financial companies are now, and anything really where it affected from people being home, trading as well, they're fighting the numbers from a year ago from the middle of everybody being home and trading their butt off. Everybody became a trader last year. So even if they didn't beat, they're still okay. So the stock's not falling and it's not exploding to the upside. So remember, one of the biggest things we're talking about interpreting at the most basic level, interpreting earnings, it's so much more than just the EPS. This is the, again, posted pad moment. What is the catalyst? What revision do I need to pay attention to that would move the needle for this type of company in this industry and in this sector group? So JPMorgan, as of right now, very tepid. It's bouncing a little bit, but not like where you see that, oh my God, the thing was up 8 or 9%. There is still 10% upside. That's the consensus estimate right now. But as of right now, this would not be something that I'd be looking at. 10% moving a little bit. It didn't beat. If they would have blew the numbers out, even compared to last year, that would have moved the needle. That would have made a difference. Net margins are the big thing. When I start to listen to the transcript later and the conference call, net margins are going to be the big one that I'm going to be paying attention to for JPMorgan. And we've seen a lot of stocks do this where they report kind of a day or two, all the news gets absorbed, and then it gets interpreted in a different way. And we'll see if that happens with JPMorgan. So that's how I'm going to be looking at over the next 3 days. Maybe we'll keep an eye on this as well. Let's see. Lynn Ramirez, good morning. Got here late, but ready for today. Lynn, we actually mentioned you today in our right here. Thank you, Lynn and Jane, for the call in the solar stocks, as well as the calls in the other lower price stocks, actually, that we've been trading. All right, so I want to get into some more ideas. I promised everybody that we talk about JPMorgan. We went through JPMorgan. Do me a favor. What stocks are you looking to trade today? What stocks are you looking to trade today? So I want to get into some other ideas that I really like today. We obviously we just mentioned General Motors, right? So General Motors around 59, looking for another run up to 64. We've also talked about JKS. So now, again, if we've been talking about JKS, which now Lynn's on the call right now. Lynn is Lynn's like the reversal guru of our community. So JKS has been in the conversation. We also talked about Run, and we get a lot of questions about, well, those stocks are too expensive. I can't trade those stocks. So then we'd be talking about something like what Jane called out the other day, SPWR. So a little bit different conversation. Okay. One stock that I want to talk about that I think is pretty interesting, and I also think a lot of people are talking about quite a bit, is Plug. You can see how we've been working the chart in Plug. It actually traded into bearish order flow for a while. Looked like it was attempting to get out, couldn't, and just beating its head. But something changed the last week or so. So again, this is where you need to have your tracking journal versus your trading journal. So if at the end of every single day, you're doing what we do, is we're running the numbers, and you start to pay attention to how things are changing, you'll notice 5 days ago, Plug had a little bit of volume with a little bit of now went well bid. Something interesting happened. So now you immediately need to put in your tracking journal, what is the price? So $29 was a big level for Plug. It got up there, sellers came in, and now it's up almost at 32. So Plug is going to be on my watch list today as well. All right. Let me see. DATS is something that Alvaro is asking about. DATS exploded. So this is actually a situation where this pullback, you know what, let me actually get into that a little bit deeper. So when order flow is good, when order flow is following through, everything that we do, again, the three pillars, stacking the order flow, tape reading, and reversing risk, right? When order flow is good, when order flow is following through, when smart money's stepping up and doing it again, that's where the push and the pause follows through. So I want to just bring up something here in DATS. We actually were looking at DATS over here. After this move to the upside, this order flow followed through pretty good, pulled back, and we're like, all right, we're going to look to this to be the next launching pad. It actually broke down, paused again, broke down, and then broke down again, and then went well bid. So I'm going to be straight up with you. I didn't trade this because it wasn't trading well. Order flow wasn't in sync, so I didn't do anything. Now the stock is actually one push away from all-time highs. Would I be looking to trade it? Probably as a day trade because of the percentage. Let's put this in context now. DATS has doubled in 3 days. Doubled in 3 days. So for this, the stock would be a bullish echo for me where I'd be looking to day trade it into new all-time highs. Then I'd be looking for the next pause to look for the new ideas. And you know what, Shane? I do not disagree with that, which is one of the reasons I don't. That's a question we get all the time. DATS is probably a good example to bring this point up. I don't trade penny stocks at all. I don't trade penny stocks at all. I don't get involved in these stocks that don't have liquidity or any of those kind of things. I trade market leaders. And again, today's call kind of, we got into JPMorgan. They're a market leader. We got into sector rotation. Then we look for the market leaders within those leading sectors. That's the way that we do things. That's the way it's been done in a big way since the stock market opened. Read any single book. Follow the market, trade the market leaders, respect risk, and learn how to make more in your winning trades. That's the process of what we do. I don't try and make it complicated. I want it to be as simple as possible. Where is the smart money pouring their money? How long have they been doing it? How much money did they spend? Which that's the tape reading part of it. And then can I find a spot to piggyback with the smart money? That's our entire process. If I broke it all down, that's the entire process. Find the market leaders and see if the institutions are bidding into those stocks. And there's ways of identifying that. All right. So again, we talked about JPMorgan. I just want to go over a few more ideas of stocks to potentially buy today. I want to keep an eye on IBM today. IBM actually broke the downtrend. If we look at it a little bit longer term picture, broke the downtrend, a couple of days of selling with the market. I'm actually looking to be a buyer of IBM over the next couple of days if IBM goes well bid. We're also looking at Tesla. Tesla is a very popular stock that a lot of people look at. So I'm going to challenge you right now. What is Tesla doing over the last 2 weeks, and especially over the last 3 days? Tesla is holding the bid. Holding the bid means as the market's going down, or even if the market's not going down, if a stock rallies and pulls back, that's okay. Retracements are kind of expected. But if a stock rallies and goes sideways, that means they're holding the bid and buyers are still underneath that. So as of right now, coming into the week, remember we talked about scripting everything out. We talked about Tesla needing to hold 800. It's kind of dancing right now between 800 and 810. So over 810, which is pretty much where it is right now, is where it starts to get exciting, and we'd start to have conversations in the boot camp about looking to start building positions. So it's kind of battle right now in Tesla between 800 and 810, but the bids are holding it above that level. So 800 is the line in the sand. 810 is the level we'd start to look to put a position on there. All right. So I want to get over into just a couple of more. Everybody spent their time with me today. McDonald's is another one that I'm looking to pick up on a pullback today. And you can see the beautiful order flow in McDonald's where they are just continuing to hold the bid and pay higher prices. We put a bullish gap into new highs, pulled back 3 days of selling. I am looking to be a buyer of McDonald's today if it meets certain criteria after the market opens, which actually that was one of the conversations right at the very beginning of the call today. Somebody had asked timing into those ideas. I want to be very clear. We spend a lot of time talking about long-term order flow, and it could be long-term for a couple of days, a couple of weeks, a couple of months. But within the context of either a day trade or a swing trade, then you have to time your entries, meaning is today's order flow in sync with the longer-term order flow? So a lot of the ideas that we talk about today, these are ideas that are in my game plan going into the day. But then when the market opens, we have a whole different set of complete scripting out of what we plan to trade that day. So again, I'd inspire you to do the same thing. The last stock I want to mention today, which is a pretty interesting one that is also holding the bid as the market's getting hit a little bit, is Oracle. The market is actually pulling back. Oracle is holding the bid, and you can see it continues to grind higher while the market has been pushing down over that same time period. So I am actually looking for Oracle to start to make a move up towards 100. We've actually got a swing trade on from lower levels, but Oracle holding the bid. So again, remember what we're talking about here. Everything we do is about if this happens, then I'm doing this. That's how you be prepared. If this happens, then I'm doing this. If this happens, that means this. So we need to know what's probably going to happen, but what we're definitely going to do. So the probability of Oracle following through and kind of kissing that 100, that's what I'm looking to happen this week. If it does, awesome. If it doesn't, we have trade management parameters. But here's the thing. I'm ready for it before it happens. So if it starts to move in my favor, if it does this, then I'm doing this. If it doesn't do this, then I'm doing this. The whole theme of today, which started out with JPMorgan stock and the earnings, we'll actually finish up with that one. The whole theme, preparation. And we talked about this. It's up a little bit now. We talked about that here. Okay. If I could zoom this out for you just a little bit more, again, are you making your list and checking it twice? So basically are you prepared? All of these ideas that we've talked about every day, from sector rotation to the stocks, all of these ideas are available. There's massive, massive opportunity if you are prepared. This is what sector rotation is, and this is what game plan is. So the big thing that I want to talk about today is I'm going to challenge you. If there's a gap between where you are and where you want to be, if you didn't catch net, if you didn't stick with net, if you didn't get LAC yesterday, if you didn't catch run after we've been talking about solar stocks, all right? If you didn't catch them, if you didn't catch MGM after we've been talking about win, what's the gap? What's the gap between where you are right now and how are you and why are you missing those opportunities? Stop whining about the market not being obvious. There's opportunities. If you dig a little bit deeper, go put on your overalls and dig them out. There's opportunity right now. And we just pointed them out. Go back and watch the previous videos. Make sure you hit that subscribe button, hit that like button. We're talking about this stuff every day. And remember, it's the stock market power pyramid. The market, sectors, which we just talked about, industry groups within those sectors, industry group, in this case, solar stocks, casino stocks, and then individual stocks that are in play. So I'm going to challenge you today, the rest of the week, especially on the weekend, we got some downtime. Ask yourself, what do you need to do to fill that gap between where you are and where you want to be? If you're like me, not being where you want to be, kind of like nausea, it's like a punch in the stomach. It's like, why am I not further? Why am I not further? I know I have more inside of me. I'm going to challenge you to do the same thing. I have to head over to my other meeting. Have an awesome day, everybody. I'll speak to you soon.